1 year ago, there were 0 spot crypto ETFs to invest in. Today, there are almost 24 to choose from. The question is, what are the criteria you should consider before investing? Our man on the ground here at Paradigm Press is prepared to tell you just that. Chris Campbell co-writes Altager's early-stage crypto investor and has been investing in crypto since 2014. And to say he's been successful is a massive understatement. He invested a few $100s and turned it into a few $100,000 in just 4.5 years. In short, he sees opportunities that others often miss. And today, he lays out where he thinks Bitcoin and Ethereum are headed in the next year. In addition to the ETFs, he considers a good buy right now. If you're considering crypto ETFs right now, you do not want to miss this video. Well, Chris, welcome back to the YouTube channel. I appreciate you taking the time and looking forward to talking to you today about one of the most sought after questions that we get in our crypto network is about ETFs right now. Everyone is talking about it. Leading into 2024, we knew this was going to be a big year for ETFs. We weren't sure if we were going to get an Ethereum ETF this year, but we knew for sure we're going to get a Bitcoin one. And now we have both. And so a lot of people want to know where to go and which ETFs suit most people. And we want to touch on that here on this call today. But before we do that, I want you, someone who's been involved in crypto for a long time now, since 2012, you've been writing about it in 2014, you started investing in crypto. What are the advantages and disadvantages of owning crypto ETFs compared to, say, just owning Ethereum or Bitcoin outright?
As everyone knows, ETFs are traded on traditional stock exchanges, so it makes them a lot easier to buy and sell. You don't have to mess around with wallets, private keys, all this stuff that you have to deal with when it comes to crypto. ETFs are regulated, so you can trust that there's an extra layer of security and oversight in most cases. So yeah, it's beneficial for people who don't want to deal with crypto and all of the wallets, the keys, and figuring all of that out.
Yeah, it seems like an easy done for you type solution compared to going to Coinbase and setting up a wallet and so forth. I know a lot of mainstream financial outlets like Fidelity, Robinhood was a big one early on. Those all allow for buying crypto online in an easier fashion. All right, so what are some of the downsides of investing in ETFs as compared to owning the actual coins themselves?
Yeah, so you have management fees, which eat into your returns. Sometimes you have tracking errors, which is not a problem that most people have to worry about, but sometimes the underlying crypto is worth a little bit more than the ETF. Obviously, there are trading hours. You can only trade during times that the market is open, as opposed to crypto, it's 24/7. You can trade whenever. So those are the big ones. I think also if you own Ethereum outright, there's plenty of opportunities to make money with that Ethereum that you can, and relatively safely. You can stake on Coinbase. You can stake on a few other platforms and earn money on your Ethereum rather than paying fees. But again, it's all down to what's your knowledge in crypto, how comfortable are you with self-custody and with dealing with the decentralized finance ecosystem.
Yeah, I mean, as easy as Coinbase is to use, which it is relatively easy, it is another account. If you wanted to invest in crypto, you'd have to go and open an account there, of course. But I think that, a lot of people are reticent to do that with some concerns about security and that sort of thing, opening up yet another account. Seems like the Schwabs and the Fidelities of the world have more credibility in terms of keeping assets safe than the crypto market probably has in recent years. But I wanted to ask about these fees because while these small percentage fees don't seem like much when we first invest in an ETF or a mutual fund or whatever, they can erode returns pretty considerably over a long-term investment. So what types of fees are we looking at here on some of these, let's go with Ethereum, some of the Ethereum ETFs?
Yeah, so the Ethereum ETFs range from 0.25%. That's what we see with iShares, BlackRock, Fidelity, all the way down to 0.15%. And that is the Grayscale Ethereum Mini Trust.
Okay.
And I don't see any material difference between these ETFs. So I think just going with the one with the lowest fees is the right move because they're all basically the same. In this case, I think about it a little bit differently with the Bitcoin ETFs, but in this case, I think it's all just comes down to who's going to offer the lowest fees.
What are you seeing in the Bitcoin space? Like, what are the fee structures similar? That 0.15 to 0.25% fee structure?
Yeah, the lowest fees in the Bitcoin ETF looks like Franklin Templeton. The ticker on that is EZBC, and that's a 0.19% fee. I am partial to Fidelity, although it has a higher fee. I think from a risk management perspective, it's a little bit smarter because Fidelity is one of the few that takes custody of the coins. All the other ETF issuers are using Coinbase as their custodian, which I think is fine, but I like to see it when there's not as much crypto all in one place, when it's a little bit more decentralized and there's not a huge honeypot. So I think Fidelity made the smart move in learning how to custody their own coins. I think eventually these other ETFs will move in that direction, but I like Fidelity for that reason.
There have been a lot of questions about the nature of a spot ETF versus an ETF that existed a year and a half ago for Bitcoin, certainly, in purchasing Bitcoin futures. So what's the difference between like a spot ETF and an ETF that was around like BTC? What was it, BTCE?
Yeah, ETHE and the GBTC.
GBTC,
right? The grayscale. So the biggest difference between those two is the grayscale futures were closed-end funds. The main difference is that the price could deviate from the price of the underlying asset.
Right.
And that's just the way that it was structured because mainly because there was no redemption process for the individual issuer. It was just not a very dynamic fund. For example, there are crypto projects where these are in the works, but there's a way for the individual holders to redeem the underlying asset from the synthetic asset. And that creates a process where you won't see the deviation because there's constantly this arbitrage happening and everybody can be involved, rather than just the authorized participants who can take money off the top. So yeah, that was the big difference is that and we saw that deviation and it was a huge opportunity for people who got in because once the ETFs came online, the spot ETFs, they were one-to-one to the underlying asset and then that discount window closed. So people who got into that benefited from the arbitrage, but the ones that we have now are one-to-one to the underlying asset, and they'll stay that way.
So if I take $10,000 and I put it in the ETF for ETH Mini, the Grayscale Mini, will that fund essentially buy $10,000 worth of Ethereum once that transaction takes place?
Yeah. So the idea is that it's going to be backed one-to-one by the asset. So
in that scenario, if I invest $10,000 in Ethereum, I see Ethereum go up on Coinbase by 10%. My investment should also go up by 10%.
Yes. Yeah. It'll track it one-to-one.
Okay. Yeah. Thanks for that clarity on that. I want to ask you a question, a prediction that you may have for where you see both Bitcoin and Ethereum going. I definitely want to touch on that before we end the call. But I want you to lay out which ETFs for both Bitcoin and Ethereum you would be investing in right now if you were to do so.
Yeah, if I were to do so. So I am partial to just investing in the real thing. But if I were to get into these ETFs, for Ethereum, Grayscale, Ethereum Mini Trust, the ticker is ETH. Again, the fees are really the deciding factor for me when it comes to Ethereum ETF. For Bitcoin, Fidelity, for the reason that I outlined earlier, it's just a risk management issue for me. And I think it's as easy as that. If you don't mind Franklin Templeton, the fees are a little bit lower. You could go that route, 0.19% fee, and there's not a huge difference between them. I think Fidelity just makes it easier, and that's where I would go.
Great. Okay, so for those of you watching, we got two tickers. We got the Grayscale Mini ETF for Ethereum, which is ETH, and then we have the Fidelity ETF for Bitcoin, which is FBTC. Chris, thank you very much for that insight. Everyone's buying these things, or a lot of people. I mean, funds. The Bitcoin ETF had record inflows into it when that thing first opened up. So there's a lot of interest in the markets for those. What I'm most curious in is where you see Bitcoin a year from now, and where do you see Ethereum pricing being a year from now? Because, look, we invested these things. Lots going on in the markets right now. We got an election, lots of volatility there. We got stuff happening in Japan. They're raising interest rates over there. And we have a lot of pressure on whether or not we're going to cut rates here at home because the economy seems to be slowing. So you got all these competing factors, and we want to know where Ethereum and Bitcoin are likely to be in the next year or so. So what's your take, and what do you think looking a year out?
Yeah, I mean, predictions are very difficult. There's a lot of things happening in the world that could throw a stick in the spokes of my predictions. But I think the base case for me is 2025. I think we could very easily see $150,000 Bitcoin and $10,000 ETH. And that's just my base case. I think if we're really in a bull market and we're going to see this continue, then I think that's highly possible. Again, black swans notwithstanding. But I think everything looks good. We're in a much better position than we were a couple of years ago, despite the sentiment being worse. A lot of things have happened in crypto, a lot of innovation, a lot of regulatory clarity. And it might not, I mean, this is the decentralized nature of crypto. Is like everybody could be focusing on one point, and it looks like nothing's happening, but this is all over the world, and different countries are focusing on different things. So you have innovation in prediction markets. You have El Salvador experimenting with Bitcoin as a strategic reserve asset. And that's why I traveled to Honduras, because they're focusing on it in a completely different way, which is how to build a crypto first, not just crypto friendly, crypto first tiny nation, basically. And what can you do with that? So a lot of the innovation is happening on a very local level. So sometimes you have to zoom in to see it. But I think nations are paying attention, and they're paying attention to what's working, and they want to stay competitive. So, yeah, we're going to see a lot of stuff happening next year. Some of it depends on which way the election goes. Obviously, there's one party that is more crypto friendly at this point, which is unfortunate, but the Republican Party is more crypto friendly at the moment. So I would like to not see the Gary Gensler party keep going, or his reign continue. But yeah, we'll have to see.
It's always tough to make predictions on things like this because no one has a crystal ball, and a lot of things can happen, especially in volatile times like we're in right now. But I always appreciate your global view on this, and actually being willing to travel to that are trying to implement the actual technology into their economy at the very, very core level, because us as investors here in the U.S. are likely looking at this as an asset play, and how do we invest in it and make it go up? But there are people that are actually using it in very, very interesting ways. I actually heard that someone was talking about making having a reserve of Bitcoin in the U.S. as well. So, I mean, there are some things that are happening that could boost the demand for both of these assets in the very near future.
Yeah, and on the reserve asset, so Trump had mentioned that in his talk in Nashville, and what he was basically saying is we just won't sell the Bitcoin that the U.S. already has. I think the U.S. they're the largest holder in terms of nations. They own 1% of the supply. So yeah, if they just hold on to that, then they can call it a strategic reserve, call it whatever they want. I think he was just saying that they wouldn't sell it. And I think it's a smart move.
Well, Chris, as always, thank you for your time. It's always interesting to get your take on these things because, again, you've been writing about it for over a decade. You've been investing in crypto since 2014, and you've had a lot of success on your own investments. And so I always like you have a tendency to have your eyes down the field when looking at crypto. And I do appreciate that because I think us as investors lose that sometimes. So thank you for your time, and thank everyone for watching. If you like this video, go ahead and click the subscribe button just below this video, and we'll alert you to the next time that we have an event or we have another call with Chris or other people in the Paradigm Press universe. Thank you all for your time, and we'll talk to you soon. Thanks, Chris.
Thanks, Doug.